Time to get some common sense on investing with Craig Bolanos, the founder and CEO of Wealth Management Group. Craig, great to have you here. You are focused on fixed income. What are top 5 reasons to be thankful for the bond market?
Well, Angela, after all, Thanksgiving just got done, and it's that time of year where everyone's thankful, but today we're putting a spin on it, what we're thankful for in fixed income. And there is no doubt that the last few years have been challenging for fixed income, aka bond investors. And while 2023 hasn't been the greatest year of bond returns, it has created a very positive setup going into the new year. So here are not the 1, not the 2, but the 5 things WMG is thankful for within fixed income markets. Part number 1, the potential end of Fed rate hike campaigns. Yes, this is it. The largest headwind for bond investors has unequivocally been the Fed, and that, for all intents and purposes, in our opinion, is likely done. Part number 2 on my list of being thankful is the asymmetrical, that's right, risk return profile for core bonds going forward. Fixed income returns are a combination of interest that we collect and price performance. Now with this very high starting yield, that yield acts more like a hurdle rate, a yield cushion. It's going to be incredibly difficult for core bonds to actually have negative returns going forward at this stage in the fixed income cycle. Number 3 on my list of why we give thanks for fixed income is the potential for equity-like returns. Remember, bond prices move inverse, or the opposite of interest rates. And I'm still in the camp of higher rates for longer, but if we did have a reduction in Fed funds, say for example, the Fed decides to cut rates just 0.5%. Well, you take a look at AAA 10-year mortgage-backed securities, you could end up having a total return of 10%. Wow, that's fantastic. That's equity-like returns that could happen in the bond market. And I think number 4, it's just the ability for income investors to get income. We've spent a decade and a half on this search for yield. The search for yield is no more. The yield is right here at our fingertips without having to take excessive risk to get what we need. And number 5, rounding out the list, I don't want to leave out municipal bond investors, because in the municipal bond space, historically, every time we've seen the end of Fed rate hike campaigns, that's not the last, but that's the last 4 Federal Reserve rate hike campaigns, we've seen returns in municipal bonds averaging 9% in the year in which the Fed rate hikes officially stop. So what does all that mean? I think it's not 1, but 5 things that the WMG team, Wealth Management Group, is thankful when it comes to fixed income markets. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. If you'd like to learn more, I encourage you to do so. Go out to our website at investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.